All right, good morning, everybody. This is Henry. All right, guys. We are going to be trading the core retail sales number today, and right now it's 8:21 a.m. We still have about 9 minutes before the release. Basically, the retail sales number is a pretty high impact release for the U.S. As we all know, two-thirds of the US GDP is made up by the retail sales number. So if we have good retail sales number, we will definitely have better than expected GDP number. So this number is regarded by many analysts as a trend-changing number in the event that we do have a strong number showing in a period of 3 months. So if we have 3 consecutive high retail sales release numbers, market would regard that as a very positive number. So as we saw last time with the non-farm payroll number, the US dollar starting to gain strength against other currencies based on the merits of the fundamental. So today, once again, we will have that chance to see how the market will react to the retail sales number, because I do believe that both releases could have the same kind of caliber of impact. And this will be a perfect time to see if the market indeed is showing more interest in the fundamental outlook of the US dollar, and maybe we won't see risk sentiment playing a strong part of this. So today we're going to be looking at 2 currency pairs. One will be the dollar yen, and the other one will be the euro dollar. Now, of course, the dollar yen has been the pair that we looked at throughout the last 6 months or so for U.S. high impact news, because of the fact that the U.S. dollar has been a very has been considered as risk haven, safe haven currency, and basically also as a carry currency. Now, with the possibility of a trend change and the way that the market view U.S. dollar fundamentally, we could see that the euro dollar starting to lose strength in the event of a better than expected USD news release. So today we're going to be looking at both, and both of them will have impact into other related currencies, such as if we see a stronger or a weaker euro dollar, we probably will see a weaker sterling dollar, a stronger dollar CAD, stronger dollar Swiss franc, and so on and so forth. With the Japanese yen, if we see a weaker Japanese yen, we could then see a weaker pound yen and euro yen. So all of this can be extended to other currencies depending on the release, and also depending on how the different currencies strength at the time of the release. So basically today's forecast number for the core retail sales. Now we're going to get 2 numbers. One is the core, and one is obviously the headline number. We're going to be trading the core. The core is ex auto basically, and that's going to show about up to 25% of difference in the release number. And if the core number were to increase by 0.6%, we get somewhere above 1%. I think that would be safe to say the US dollar should be gaining some strength, or at least we'll see between US dollar and risk appetite fighting for that momentum. Now, if the number is worse than expected, then we'll also have to look at the market and decide what's likely to happen. But one thing for sure, I think the dollar yen, Japanese yen, will probably get a little bit stronger on a worse than expected number. So we'll just have to wait. Now, of course, with the lower liquidity associated with this time of the year, we have to be extra careful. So it's going to come out any moment now, guys.
Sales 1.3% above the 0.6% expectation, prior revised lower by 0.3 to 1.1%. X autos at 1.2% above the 0.4%.
Okay, we have a good, better than expected number. Definitely a better than expected number.
Price at 1.7% is 0.5 higher than expected.
Okay.
Prior revised 1/10 higher to 0.8%. Import price year over year at 3.7% above the 2.9% expectation. Prior revised 1/10 higher to minus 5.6%. In Canada,
okay, let's look at the pound dollar, guys.
Expected, no revision to prior.
Let's go ahead and take a sell on the pound dollar. Sell for the pound dollar. Let's sell. Alright guys, basically we entered around the 87 number. I definitely believe that this number is a strong number, especially on a core number. We're getting a 1.2 versus a 0.4, and we're going to be seeing a stronger dollar pretty much across the board today, with the possibility of retesting the lows on all the European pairs. The number is very strong, and now is the time for us to see if the fundamentals will start to play a bigger role in this trading, in the news trading, and also in the movement of the currencies. Based on the immediate strength meter, we saw a weaker British pound. So I went ahead and I choose to trade the British pound versus the euro. Let's just see if we will see a quicker drop in the British pound than the euro. So we are all enter around this area, and I think the entry is between 79, which I think Camilo got, and all the way up to 91. So we're all just enter around this area. Now let's see if for the next half an hour the market will really start to push down, or strong buyer of the US dollar. The initial target is going to be the low end of the day, which is going to be around the 60 area. Let's see if we can get the market to push down to the 60s. And then the second target will be maybe around the 30s. Okay? So that's where I would be concentrating. And we are going to be looking, maybe if the market goes above the 163, that's where we will be taking our stop loss. With the reversal coming up, let's just go ahead and close it. Alright, let's close the whole trade. I guess the reason is that, we already have 20 plus pips depending on where you got in. Why mess with it, right? Market could be bouncing back from the 50s, 162.50, 50-55 area. So even though there is more of a possibility to go down, but I feel 50 is a pretty strong level, and with the euro dollar hitting the 147 handle, we just don't know if it's going to break it or it's going to do a bounce back at 147. So better just to leave it alone. And we've seen the pound yen and the euro yen going up. So we'll pick up our 20 pips. Some people pick up a little bit more, some a little bit less. It's not a problem. The idea is now we are seeing fundamentals becoming more of a factor here in our trading.